Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another great video. Thank you for taking some time out of your day, night, evening, whatever the case may be, and spending a little time with me to get that coveted financial education. Hey, in this video, I want to talk to you about the rich. Ooh, those people, the rich. Today, we're going to talk about how the rich invest in stocks. And here's the best part, how you can too. How the rich invest in stocks and how you can get started and do the same thing that they do once you have a financial education. Now, before we get started, there's a couple of things I want to talk to you about. First, I'm just going to tell you a little bit about my story. I was raised by a single mother who struggled to pay the bills. In my household, we didn't know anything about investing or finance or any of that. It was just, my mother used to say, get a job and maybe you can make some overtime, and that's how you actually get ahead in life. Today, I actually have been fortunate enough to be a great investor. I live in two cities. I live in both Malibu, California, and I have a home that I built in upstate New York, and I shuttle between the two, and in there, I have a great lifestyle. But the thing I'm most proud of is that I get to help and teach other people just like you create wealth. So here on the wealthyinvestor.net website, you can get a little bit of information about me and my background and how I actually came to do what it is that I do today. But the most important thing that I want you to remember is that you can have lots of financial success. Now, here's the key to it all, right? The idea is that once you get enough money, you give back. But here's what I really want you to know. There is an emotional and spiritual component to money and wealth building. Now, I'll say that again before we get into what the rich do. There's an emotional and spiritual component to wealth building, and most of it has to do with your belief system. You realize if you grew up in a family where no one taught you how to invest in money and make it grow, then you wind up working for a living, right? But one of the things that I want to introduce to you, it is your consciousness and your money beliefs about what is powerful for you in your life if you were never taught wealth building techniques. I want you to know that you have the power to change that right now if you keep an open mind. All right, so as I'm taking you through these strategies, it's not really so much about me, it's about me helping you. And the way that that works is if you keep an open mind. So let's see if we can jump into what the stock market is and how the rich use it and why their net worth, like after all the expenses, are high. It's because they know how to invest. And a lot of the wealthy people, this is on CNNmoney.com, tend to stay in something called the Dow Jones Industrial Average. Now, you see that up here where it says the Dow Jones Industrial Average? Now, what is that? That's the top 30 stocks in the U.S. stock market, right? And how they perform as a group. Another fancy way to say that is how they perform in aggregate. And some people say, well, if those top 30 stocks were up or down today, then this average, this Dow Jones Industrial Average, right, was moving, or the market was up today. Now, you'll have to work with me here because I tend to teach from the what I call the Sesame Street version of things, right? So I try to keep things really simple. You go home, then you trade your money, and then you come back to our next meeting or online webinar, and we talk about what it is that you did. All right, so let's talk about some of the companies that are in the Dow. On this particular day, the Dow Jones was down. That means that group in aggregate in total was down today. And what are some of the companies that are in the Dow? Well, every stock has its own ticker symbol, but there are companies like American Express. Its ticker symbol is AXP. Boeing, right? Chevron, Cisco, DuPont, ExxonMobil. What are some of the other names? IBM. You might recognize Johnson & Johnson, Microsoft. These companies are fairly conservative, and they have long track records of making money. Now, in the Wealthy Investor Program, we call this, they make good dates, right? We don't fall in love with stocks. We're not here to find our soulmate with stocks. We're just here to find stocks that have a tendency to rise based on the company's ability to make money. So, what is a great way to start investing? Well, investing is different from savings because when you're investing money, you're putting it at risk. You're buying a piece of a company and hoping that company continues to generate revenue, and then you participate as the stock price goes higher. So one of the ways to start investing is what? You can start with something that you know. Now, most everybody has an iPhone, iPad, iSomething, and this is a company called Apple. Now, I want to show you this because today Apple's stock price is $524.75. If you're just starting out, you may not want to. You can buy one share of Apple stock, but probably not today. Now, it's ironic because in the day that I'm actually recording this lesson, Apple just came out with great earnings and they announced a 7-for-1 stock split. Now, some of you may know what that is and some of you may not know what that is. That essentially means that this stock price is going to go cheaper when the company breaks its shares into 7. But I want to point out a few things. This is called technical analysis. And remember, it is your mindset that's going to allow you to absorb this financial education that I'm giving you. Because unless someone shows up in your life and explains to you how to read this chart that we're looking at right now, guess what? It'll probably all escape you. So have an open mind. Right? We want to spiritually and emotionally be open to creating more wealth. And I know the spiritual part sounds a little weird when it comes to wealth building, but trust me, there's a component in it that's very, very valuable. If we look, this is a 5-year chart of Apple, but if we look at the 52 weeks chart, we know that the stock has been as low as $388.87 and as high as $575. That's the 52 week, right? But this is a 5-year chart of Apple's performance. Now you see, if we had gotten it just above 100, I'm going to do a very interesting comparison here. I want to show you when the stock was around 100. Now, some people in the Wealthy Investor Program, we were actually buying the stock when it was 80, right? But just for purposes of this lesson, I'm going to say you picked up just 50 shares. 50 shares, that would be a $5,000 investment. The question is, if you held onto those shares and you let them rise. Now, why did you choose Apple to begin with? Because it's a company that you're familiar with. See, we can start off investing just in things that we actually know something about, and we learn how the company makes money. But if we got, you see on the Yahoo Finance chart, if we got those shares around 100, it's a little bit more than 5 years ago, just a little earlier, and we just bought 50 shares, a $5,000 investment, what would that, holding on to those shares, now this is in 5 years, you get a better return here in this particular stock than you would owning real estate. Your $5,000 investment today would be worth $26,200. Why? Because all you did was let the executives at Apple do the work and the consumers bought the product. You bought your shares at around 100, and today you see that those shares are at $524 because you invested in what? In something that you know. Now, for those of you who are a little bit more technicians, you realize the stock ran up to $700, then it had a pullback, right? And then a slight retracement, and then it's held steady. But after this 7-for-1 stock split, it looks like these shares that are currently $524 are going to go down to about $100 a share. That means that you could get in with just what? $100 into shares of Apple. If the company does well, you continue to participate. So what do the rich do? Well, they put most of their money in what? Dow Jones stocks, these steady Eddie stocks, and then they branch out to non-Dow components like Apple. Now, you see the performance of Apple. Okay, let's go with another company that you might know. Apple's ticker symbol, by the way, is AAPL. Now let's take a look at another company. You may not know this company. It's called Align Technologies. And what they do is, you may have seen those invisible braces that have become very popular. That's one of the products that they actually do, but they really sell services to dentists. They basically outfit their organizations with your dentist office with all this high-tech stuff, and they charge them service fees. But look at this stock's performance. Let's go back down, do what we call a little bit of technical analysis. The 52-week range here, the stock has been as low as 32.10. I'll highlight that down there so you can see it. And it's been as high as 65.10. Now, stocks that grow, that are non-Dow components, they raise and then they give, and they raise and they give. And although the stock has been up to $62, it's right here at $52.45 at the day that I actually recorded. Now, I'm not telling you to go out and buy these specific stocks, but I'm teaching you how the wealth game works so that you can participate. Instead of having your money in a mutual fund, you can buy stocks directly. Align's ticker symbol is what? ALGN, right? Imagine if you had bought these shares. Now you see that at one point they were as low as $10. But let's say we didn't get them right at the low. We missed the boat. The stock rose. It gave. Remember, they rise and they give if it's a non-Dow component. And let's say we picked it up right here at around $15 a share. And we bought 100 shares. Now that's a $1,500. Now, when people are negative, they push money, wealth, happiness, success away from them. When people have an open mind, they find the $1,500. I always like to say, if you got an income tax refund, then you have investment capital for the stock market. So let's go back to the scenario. We picked up these shares down here around $15. And we bought 100 shares, and those 100 shares, that $1,500 investment, because we bought 100 shares, is now worth $5,245. Now, where else are you going to take $1,500 and turn it into $5,245 in less than 5 years? You can't think about buying a piece of real estate and achieving the result that you see here, but you can do it in stocks. Right? And when you own stocks or when you invest in stocks, there's no attorney fees, no credit checks. There's none of that stuff out there for anybody to scrutinize you. Another way to say that is the barrier to entry is low. And so when you hear these terms in the financial market now, you'll know what they mean. Why? Because all wealth is taught. I'm letting you in on the game that the rich have. Now, we're going to start off with companies that we know. Have you ever heard of this company? The ticker symbol is SBUX. It's, of course, Starbucks. Now, if you don't know what Starbucks is, you're clearly not walking around your neighborhood, and perhaps you don't get out much because there's one on every corner. Now, if these are stocks that we're going to date, the first thing we're going to do is look at the picture, right? Is the stock in favor? Does Wall Street like it? Maybe we want to own a piece of this. This is a beautiful picture. You know how I say growth stocks that are non-Dow components, they grow and they give and they grow and they give? Well, this has been a real reliable riser. It's given a little bit, but let's go down, do a little bit of technical analysis. The 52-week range, $59.13. It's been as high as what? $82.50. You see that? But what we're looking at is a 5-year chart. What would have happened if you just bought some shares and you held them? Now, Starbucks, we're not going to say we got it down here at the bottom because that's cheating, because I would be, getting you a little too excited. So we're going to say we missed the bottom down here, the 5 years, and we got in late at around $20. Again, 100 shares is a $2,000 investment. How much is that investment in Starbucks worth today? $7,000. Let's talk about what the rich do. If you had been investing in the stock market and someone in your family had taught you the way that I'm teaching you about wealth, well, maybe you would have sold some of your what? Dow stocks over here, this list of these stocks, to diversify into some of the up-and-coming stocks that is not part of the Dow. Starbucks is not part of those 30 stocks, okay? So we're talking about a $2,000 investment becoming a $7,000 investment. Well, if you've been investing for a little while and you grew your money, what would happen if you took $20,000 down here and bought Starbucks stock because you were familiar with it, right? Its story and how they make money. Your $20,000 investment would be what? $70,000 today, right? Now, there are some people, when the stock was at 20, they bought $200,000 worth of stock, which means they're sitting on $700,000 today. Do you see how the game is played? You have to learn how to invest. You have to learn how to change your life financially, but it all starts with your emotional, intellectual, and spiritual relationship with money. You have to learn how to put money somewhere where it actually grows. All right? So, if we're seeing all these winning stocks, are there stocks that ever lose? Yes. Not all of the stories that we know of are good. Now look at a company like Yelp. All right. You see this pattern down here, how Yelp is starting to give? There are reasons for that. I can't get into it all now, but it has to do with the story of Yelp and how fast the stock actually rose. Okay? All right. But we know that the stock, its 52-week range, it's been as low as $24.94 and as high as $101. It's been as high as 101, but look at how it's dropped down to 64.50. Why? There's a reason for that. So it's not that every stock we choose always rises. Every date that we go on is a great one. Here's Apple. Here's a line, right? Here's Starbucks. And here's Yelp. Well, how do you avoid being in this situation with Yelp in a stock that is declining even though the revenue is strong? Now, that's what I teach you at the Wealthy Investor Program, okay? And it is your job now to reach out and get that financial education. Now, I always say I meet the right people at the right place at the right time because that's how the universe works. Your job is to go to thewealthyinvestor.net, my free online workshop and seminar series, and we have some live events in New York and Los Angeles. They are just around the corner. You will not know about them if you don't sign up for the free Wealthy Invest in Stock Market Success email newsletter. Now, you make a choice right now in your life because all wealth is taught. What is your next step? Well, it's quite frankly, quite easy. Sign up for the free Wealthy Investor newsletter. Join me on the next webinar and seminar and start to get that financial education that you did not get in high school, junior high school, college, grad school. Why? Because all wealth is taught. So I need you to ask yourself the question, are you ready to make advances in your life? Great advances by participating in the stocks and companies that you actually know right now. If so, I'm looking forward to helping you develop your mind, your consciousness, positive financial habits, and teach you what the rich know, which is how to invest in stocks for long-term wealth. Thanks for joining me, and I'll see you soon.